Good morning, everyone. It is Tuesday, the 24th of November, 2015, 8:03 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Quite a bit of news overnight. The key of which is at about 1:30 a.m. Chicago time, 2:30 a.m. New York time, Turkey shot down a Russian military aircraft near the border of Turkey and Syria. The airplane shot down was seen dropping and burning up in on the Syrian side. Two pilots seen parachuting out of it. The Turkish government saying that they had warned the airplane, which was violating its airspace, they had warned it 10 times before sending F-16s up to take it down. This action got a very strong reaction across all indices across the globe. The ES dropped from 2087 from approximately 2087 quarter to 2065 and a half, 20 points drop, and has recovered to 2079 before it's running through its continuation move now, currently trading 2071. As a point of reference, we closed at 2083.75 yesterday, so we're about 12 points below yesterday's close. The State Department last night also issued worldwide travel alerts for U.S. citizens regarding increasing terrorist threats and chatter, calls on citizens to be vigilant. It did not advise against travel. Russian President Putin says that the Turkey shooting down a Russian warplane today was a stab in the back by a country that is a terrorist accomplice. Pilots were never threatening to Russia. So this is to Turkey. This is a situation, a geopolitical situation that could see some additional stability. As we all know, the market does not like uncertainty. Or does not like additional risk, so money will likely move from equities to gold and commodities, as well as treasuries. And for that reason, we see gold up $9.60 right now at 1,076.4 per ounce, up almost 1% over yesterday's close. Crude oil, January 2016 crude oil trading at 42.66, up 91 cents or 2%, again as a reaction to that. France announced that the approval rating for French President Hollande has risen 10 points to 32%, so he was at 22%. There's nothing like war and conflict to improve your ratings as a president. And there you have it. Germany's November IFO business climate came in at 109 versus 108.2. And then at 7:30 this morning, 7:30 Central, Q3 preliminary GDP annualized came in Q on Q at 2.1% versus 2.1, so in line. Personal consumption 3.0 versus 3.2, a little bit light. Preliminary GDP price index came in at 1.3 versus 1.2, a little bit higher. Core PCE is at 1.3 in line. I'm not sure why the cat's complaining if you can hear it. And then finally, U.S. Case-Shiller housing index came in at 0.61% versus 0.3 for month on month. This is a 20-city index. Let's look at the technical side of things. So yesterday, the expectation that we talked about, the primary hypothesis is for the market to open in range, in or out of value. The expectation is for it to, not sure why I can't draw. Okay. There's a massive lag on my machine here. Needs a restart, I guess. The expectation is for it to chop around this morning, potentially test value high, which was at 91.50. And then ultimately the primary hypo was for a test of 2080.50. Took all day. and has pushed through or above this value high number. It pushed about a point and a half through value high yesterday, but it put in a terribly poor high with a point of control that shifted up very early on. So the point of control shifted up right here. And the expectation under those circumstances is that the high would be taken out. This 2093 would be taken out, and it just lingered. I mean, look at these consolidation zones here. It just took hours. Um, there was not much participation. We'll look at the 15-minute volume as well, and then finally, excuse me, finally drops, touches the OS high, pulls back to 2089 right against the mid, and then off it goes, off to the races it goes, and it tags its 2080.50, which was right here, the 2080.50 target, and pushes through, and it actually gets the VPOC left behind from last Thursday, gets it within a tick, and then bounces back up to the mid. Had the session continued, the expectation is for it to push through the mid by a little bit, and then to recheck that low. The time ran out. The session was very sluggish, very poor price action, really. But there was some stuff you could do with it, but most of it, this terrible range here, really lulled everyone to sleep before the break. The break had really good delta. We moved from a positive 10,000 to about a negative 8,000 delta. Pretty good participation. So we have an impulsive move here on the short term with a continuation, but on a longer term, we still have an impulsive move that has not continued. So I expect that low to be tested again by the end of this, or at some point today, and it just ran out of time yesterday. Let's take a quick look at the volume. So this bottom chart here, bottom pane of the chart, yesterday's open, this is what was actual right down here, the bar. And this here is a 20-day median, the 20-day median for every bracket. In this case, we're looking at a 15-minute chart, and you could see we traded about half of what we normally do. 52,395 traded versus 118,000 median. The prior day was in line to a little bit better, so you could see the bar overtaking the yellow line. But here, just no participation yesterday or early on, and you could see that we've got just a massive drop off in volume and just a creep in volume all the way to the point where we do this drop, and then finally volume picks up in this bracket and stays active for 3 bars before it drops off again. The closing bar is also less than half of what it normally is. So we expected that this week with Thanksgiving coming in, Thanksgiving holiday. A lot of folks are gone. And so we expected some the trade to be light, but it's acting like it's closer to Wednesday than Monday. Let's look at the overnight session before we go into our hypothesis here. Here's the news from Turkey with the Russian jet. An clear impulsive news-driven move down, pull back to VWAP and mid. And then it looks like it's looking to do the continuation. I had said yesterday, again, the expectation yesterday was for us to rotate down, for this market to rotate down and retest the 2080 point of control, this line here, the 2080 point of control from the top. We haven't done that yet, and we just did yesterday, so that's complete. The other thing we did not test from the top, but have broken through from the bottom, is the gap that was left behind on the 10th on the 10th of November. We've taken the gap from below and pushed through on Wednesday, but we have not tested it from above. The gap is 2068 down to 2063.5. The overnight low was exactly the center of the gap at 65.50. That's the midpoint of the gap zone. I expect that this morning, I'm sorry, there's a lag to these charts here today for some reason. I expect that this morning's action will likely be responsive. So we are down here. The expectation this morning is for it to make an attempt to push towards 2078 and a quarter. Chances are it will likely get back up into the 2080, 2083 area. I do not expect it to continue lower. However, we are opening out of range below and on geopolitical news, and we are in the middle of this high volume zone, right? So if we squish this, we'll see, as I've been talking about for the last few days, we are in this super high volume zone here, and we're trading below it. We're trading below it now. The cutoff point 75 quarter. This line right here is the low volume node. The light pink lines are low volume nodes on the composite, on the micro composite, and these green lines are the high volume nodes on the micro composite. Those are put on automatically, and we are trading in this next high volume zone below. And so the expectation is that because we're in a high volume area here, the expectation is that it's likely to attempt to go higher. But don't be surprised if it does not. I'm going to watch very carefully who the participants are and what kind of participation we get on the open, and that's going to dictate which way we go. We are opening out of range. Again, we're opening out of range, which means that there's an imbalance in supply or demand, and that imbalance could resolve itself by rebalancing, which means it rotates up, and what we call responsive. So the market moving back to its most recent auction, which is right here. Note that yesterday's point of control remained at 2091. The point of control transitioned higher and higher. It did not move down with the sell-off yesterday. Let's bring this back so you can see it more clearly. So you can see here the VPOC moved from there to there to there. The action yesterday was not enough to move the point of control down here to give us a reversal, not only in price action but in value. So right now, value is actually in line or stable while the price action is lower. That gives a higher probability of responsive buying to test 78 quarter, 80.50 MCV POC, and then ultimately the 83.84 close is what's expected for Hypo 1. However, if that fails, if it attempts to go higher and then we see a drive lower, then we're going to target 62.75 VPOC below this gap zone that we have here, this purple area, and then we start to look at the composite to see what the next area down is, and the next area down below that. So here's the naked point of control at 62.75, and that's the expected target below if we start to rotate down. But if we become initiative, in other words, if we open underneath a gap and then we move away from value, initiative action is usually very strong, and the ultimate target is going to be this 52 area here, the key neckline below that cuts off the high volume area that's above from the high volume area that's below. So again, the scenario is it's opening out of range. It's likely to get responsive. Test yesterday's low at 78 quarter, get to 80.50, test that, and then likely to get to the 81.82 area where we closed yesterday to resume that auction, to basically verify that auction and to continue on its merry way. If we open and we see that we get a drive lower, in other words, if it attempts to go higher and then we see a strong drive lower, Then the targets are the bottom of the gap zone, 62.75. This is a naked point of control from last Wednesday, but the ultimate target is 52 below. If we get a drive, then covering 20 points to 52 should not be a problem for this product. I'll leave you with that. It's a lot to digest. There's a lot of news, and I'm over my time. Good luck, and I'll catch you tomorrow. Take care.